Good morning, everyone. Hope everyone is doing well. Roger Scott here. Today is Tuesday, August 8th. It's about 7:51 in the morning. The market's going to gear up to open up in about, an hour and 40 minutes or so, give and take. Let's get into it right now. We've got a lot to talk about. Before we get there, make sure to like this video, subscribe to this channel. Just go hit the subscribe button. Make sure you subscribe to my Telegram channel. I post these things there early. I give free trades. I give reports there. I give pictures of Clyde, my cat, and 3 others. Subscribe, rogerscott.com/Telegram. Lastly, I opened up my VIP room for the summer. Today's Tuesday. It's happening at noon Eastern time. You catch up the second part of this video live in my VIP room. The link is above or below this video. Let's get started. Wow, I did that in less than a minute. So the Nasdaq is down 130 points. The Dow is down more than 230 points. Yesterday was a pretty strong up day in the market. Not too strong of an update, but as you could see here today, the market hasn't even opened up yet, and we've already erased most of the upside that we've gained yesterday. We gained 0.87. We're now at negative 0.76. And as you can see here, this descending triangle doesn't seem to be going anywhere, and my fear is it's going to pounce down. Now, the bond market, if you're looking at the bond market, you'll see that it went down yesterday. It's up today because we have more negative news, but I wouldn't be holding my breath. I think that this trout down is going to cause us to come back down. The trend is very strong. The fact that this bottom here, right here, is lower than this bottom, the fact that it couldn't bounce off of these levels, the fact that it had a falling knife, the fact that America is getting downgraded by a credit agency, which is kind of funny if you think about it. These are not good news. This is putting a lot of pressure on technology stocks and the broad market, and China's not helping either. And if you look at the QQQ, you'll see that Amazon didn't do us any favors in terms of bringing us out of there. It did it for the consumer discretionary sector. It did it for the consumer discretionary sector. But look at XLK technology or the broad market. See that? So I would be really, really cautious right now, especially in light of the bond market, in light of the fact that earnings are not coming out as great as we thought, and the fact that we're breaking key levels. Look at the Dow right here. See that? We're breaking key levels. Look at IWM, the small caps. There's nothing really exciting about this market right now, and there's no major catalysts. You see that? And the Fed is basically saying, we're not saying we're done, we're just done for now. We're going to wait till to see how things go. Now, just so you know, yesterday earnings were starting up for the week. This is going to be the last, I don't even want to say the big week of earnings. Big weeks of earnings already passed the last 2 weeks. Medium caps, and then you have small caps. But today you've got UPS, you've got Lilly, you've got DataDog, which has already come down. It's it's on my list of small caps that are for day trading, which means it's moving down fast. Rivian, UPST, Twilio, Mara, all of these stocks are coming out with earnings. We have to be very, very, very cautious, especially because UPS and Lilly have big market cap. Tomorrow you've got Disney, and that's pretty much done. We're pretty much done. I mean, we're not done, but we're pretty much done for all intents purposes. Now, let's talk a little bit about the broad market and what we can expect. And remember something important. Everything is going to accumulate. It's going to come together on Thursday and Friday when we have the CPI and the PPI, and I'll get into more of that as we get closer to it. Today you've got international trades in goods and services and wholesale inventories, but I'm telling you, earnings and CPI, PPI is what's taking center stage today for the market. So China economic rebound, fresh worries about China economic rebound, and the state of U.S. Bank. Oh, this is bad. This is bad, bad, bad. And just yesterday, I was saying it looks like the worst is behind us for banks. But again, they have to come in. China, small cap banks, not good. That's additional worries on top of the earnings worries that we're seeing. Moody's lowered credit ratings by 1 notch for 10 small mid-sized banks late Monday and indicated the possibility of downgrading major lenders. That's bad. That's going to cause financials to go down today. Matter of fact, if we look at financials, I'm just going to take a little run at it here. Yep, We're down already. And again, remember I said we're going to be coming down here. This doesn't look like there's any reason for the stock market to rally right now. That's the biggest problem. Bowman on Monday restated her belief that the Federal Reserve may need to raise rates further to completely restore price stability. I agree with her. I supported raising federal fund rates at our July meeting, and I expected the additional increase will likely be needed. That's what I think too. Williams said his view on needs to maintain a restrictive U.S. monetary policy. He also stated interest rate cuts may be warranted next year if inflation slows. I think he's on crack, but what do I know? We still have an 85% probability that the Fed will not take any action at all, And as I mentioned, you've got a lot of bank stocks coming out with, not bank stocks, broad market stocks like Lilly, UPS, Zotis, Duke Energy coming out with earnings. No major news. You got trade balances coming out. Philadelphia Fed President Harker and Richmond Barkin are going to be talking. Want to see what they say. Europe downgraded by Moody's. That's putting pressure on the market. China closed lower as investors assess trade data, underscored deceleration momentum. China can put a real pickle into U.S. economy. And Japan closed higher, tracking overnight gains on Wall Street. Caution prevailed due to impending peak of domestic earnings season this week. So they're just following U.S. And you've got Czech surging pre-market. You've got Beyond Meat, Home Depot. Things are just not great. And look at all of these stocks coming out with earnings. I gave you the big ones right here, the real big ones. And tomorrow, the big one is Disney that's coming out. As I mentioned, we don't have a lot of news, but international trades and wholesale services, so we want to look at technicals. Technically, remember today's strongest sector, strongest stock? Well, let's see. Over the last 6 weeks, energy and financial. I wouldn't be putting money in financial with this downgrade with bank stocks right now. I want to see how they react to the news. 3 weeks, energy, blue chips, financial, healthcare, communication services. 1 week, financials, healthcare, consumer discretionary, energy still here, consumer staples. So you could see here, it's kind of mixed, but it's not tech heavy anymore, all right? And to the downside, utilities. To the downside, utilities and technology, and downside, technology and utilities. So we know where money's coming out of. It's coming out of technology and utilities, and it seems to be going into financials, healthcare, energy, blue chips, financial, and healthcare, although be careful with financials today. So now that we have a roadmap, let's look at the stocks making highs and lows, and we can pick some of the best stocks, and we can pick some of the worst stocks. So just keep in mind, we already know that blue chips and energy are doing really well, right? And we know the technology's not, and we know financials could be on a little pickle. So real estate, right there. Pulte Homes is great. I've been talking about the stock all the way since it was at 65. It's still moving. It's still looking good. Let's take a look. Here's a blue chip stock, Eaton, ETN. It's consolidating right now. It looks really good. I like this stock. So if I was a picker, I like ETN. I like Pulte Homes. Let's see what else I like. United Rentals looks really good. GE looks great right now. I love GE industrial stock. I really like GE right now. We're long. I would buy it if we weren't. But I do like it, and I like FedEx. So here are the stocks that I'm liking. I like FedEx. I like GE. I like United Rentals, and I like ETN. I do like, and Pulte. I do. I like those stocks a lot. Now to the downside. Let's look to the downside. Let's take a look. What I don't like to the downside. Well, right away, we see DXC, technology company. This stock is an awful stock right now. Not a good stock. Etsy, another stock, not a great stock. I told you about Verizon when it was down here. It already, too late. I look at my videos in the past. You'll see. But right here, Dominion Energy, utility stock. It looks like it's right at the low, and it looks like it can break lower. Not seeing a lot of love over there. And let me go to technologies. Let me go to technologies, and we'll find the weakest technology stock right now. Why don't we do that? And the weakest technology, or stocks in the technology sector. Ulta Beauty, I think it's going to fold. Economy slowing down. I think Ulta's going to fold. Don't like Ulta right now. And let's see here. Let's see here. Ooh, so many choices. So many choices. SGen right here. CGen. That way you have a little bit of both. And also Texas Instrument doesn't look great either. That's a tech stock. Tech is not doing well. I think it's going to come down to 160. So if I had to choose, probably Texas Instrument. With chips being overbought right now, Texas Instrument. Definitely Texas Instrument and Ulta Beauty. Folks, before I let you go, remember, I always give you small caps, right? Let me give you some small caps. If this isn't value packed, I don't know what else. What is? So, and again, if you're liking this, please comment below these videos. I really want to hear from you. You can find them in the YouTube channel, or you could find them on our site. So the stock is up 20%. It's having earnings. There may be a reversal to the downside or momentum, but that's definitely a stock you want to keep an eye on today. Then you've got Novax. The stock is up 18% pre-open. It's a big mover. And then you have to the downside, rough, DataDog. Look at that. It's down already 23%. Bad earnings. And another stock you may want to be watching today for a day trading play is this Alteryx. Look at this stock. A lot of these big movers, they tend to reverse. So if you look at it intraday or on a 5-day basis, let's see here, on a 1-month basis, 3-month basis, right here, they tend to come back up. So that's why I'm giving you. And the ones that open up, they tend to come back down. Now, folks, before I let you go, I've got something important. One of our incredible traders has been meeting with a top Wall Street firm and consulting with Fortune 500 companies to take a peek behind the curtain of a top secret investment. And he's been on a mission to show everyday folks how to activate their very own executive payouts. You're probably wondering what that means. Well, it's a unique way to target payouts of your own by following some moves of C-level executives like company CEOs, CFOs, and board members. The insiders who are buying their own stock for likely just one reason, because they think it's overvalued and about to go up. Undervalued, because they think it's undervalued and they think it's about to go up. That didn't make sense. So our trader, we're calling him Mr. X for the time being. He's going live today at 11 a.m. on Wednesday to reveal, not today, tomorrow, live tomorrow on Wednesday at 11 a.m. to reveal all the details. Click the link below and save your seat for Mr. X's big reveal. Follow the link. Don't miss out. You guys are going to love this. Bye. Have a great day. Remember, like our channel, subscribe to our Telegram, and comment below the videos. Bye.